afternoon, everyone. We did see a little bit of downward pressure in the broader North American equity markets today, with the Dow and the TSX down ever so slightly. The S&P 500 down by about a half a percentage point, with the real pressure continued to be seen in the tech shares. So the Nasdaq down by 2%, and the Russell 2000, so the small cap companies in the U.S. down by 2.4%. So you are certainly seeing continued pressure there, despite the fact that we do have some rate stabilization. It seems though investors want to continue to perhaps take some profit in those areas that have done just so well since the beginning of the year, and that of course being tech and also the small cap companies. That despite the fact that we have heard from Fed Chair Jerome Powell as well as Treasury Secretary Janet Yellen in the past 2 days, their testimony to Congress saying that they don't see the economic rebound generating persistently high inflation. That might be the case, but I think you do see some money managers taking a little bit of profit as we maybe go through a period of seeing rising prices. In terms of the tech shares, it seems though anything that has a 20 plus multiple on it, so greater than a 20 times PE multiple, is really just not catching a bid. You are seeing investors sell some of those stocks. So think of Peloton as an example. If you like the bike, you maybe could have bought the stock. That was down by 7% today. And Zoom as an example, that was down by 4.5%. It seems though there's some fatigue surrounding Zoom. Citibank, for one, coming out and saying they're going to have Zoom-free Fridays to decrease kind of the work-from-home stress levels. So some of those areas of the market, again, that have had a great run and are perhaps richly priced, depending on who you ask, are seeing some selling pressure. Away from that, what we did see was some moves higher in the reopening trade and the cyclical value-oriented areas of the market. So think materials, financials, as well as industrials, all of those outperformed. Energy was a high flyer today. The price of WTI was up by 5.9%. On news, of course, that there is a 400-meter long container ship grounded in the Suez Canal on the back of high winds as well as a dust storm. So that route alone contributes to about 12% of global trade that goes through that route, 8% of liquefied natural gas, and 1 million barrels of oil per day. So we will wait to see in terms of the ability to dislodge that. But obviously there's a bit of a backup, and that's going to increase freight costs as well. So just be aware of that. But it certainly did help the energy stocks and sector today, in addition to some of the high frequency data we've been witnessing showing that you are seeing a little bit of a pickup in consumer buying, consumer trends. Away from that, in terms of some of the other investment themes people are thinking about, rate stabilization, that U.S. 10-year yield has found some stability. We are also, of course, seeing an increasing pace of vaccinations in the United States, and other high-frequency economic data also pointing towards a consumer that is improving. Headwinds, though, of course, we do have some concerns surrounding COVID cases. There's no change to that. And also, of course, the European economy, there's been concerns, of course, that that's slowing down. But at the same time, we did see some positive growth, first positive growth in about 5 months out of Europe. So some positive news on the economic front there. In terms of stocks to watch, an upgrade of Alcoa over at Morgan Stanley. That stock ended the day up by 5%. GameStop, if you followed that Robinhood Reddit retail investor, that was down 33% today. They did miss on their earnings. Mountain MTN or Vail Resorts, that stock was down 7%. If you're a big skier, do note that your price of your Epic Pass will be down by 20% next year. So from a stock perspective, that wasn't such good news in terms of not having the pricing power that perhaps analysts had been expecting, and also analysts, but nonetheless, they are going to decrease the Epic Pass by 20%. Away from that, an interesting stock to me to take a look at if you do believe that the consumer will be out and spending is Estee Lauder. That stock was upgraded to an outperformer over at Wells Fargo. The stock closed at $281. The price target moved from $290 up to $340. So again, it closed at $281. Price target over at Wells Fargo's analyst, $340. As it relates to the TSX, we did see some pressure in healthcare stocks. Of course, that's mostly cannabis companies, as well as tech. But of course, energy stocks certainly outperformed on WTI moving higher. Canadian dollar also outperformed the U.S. dollar, or was higher versus the U.S. dollar. We are so often viewed as a commodity currency. So on the back of that, with WTI higher, we did see the Canadian dollar show some strength. Keep in mind, though, that analysts are concerned that Canada's slow rollout of the vaccine could be a drag on the Canadian dollar, of course, the Canadian economy. Speaking of which, we have not had a budget here from our federal government, in 2 years. I mentioned this yesterday. We will get the budget after 2 years on April the 19th. And also, the Bank of Canada governor will be speaking tomorrow on a central bank panel. So again, listen for any kind of commentary out of him as it relates to rates and also bond purchases. But the deputy governor of the Bank of Canada did mention today that even when they pull back on the bond buying program, that they do plan to keep rates low until 2023, in case you're out there looking to buy a home or borrow or what have you. And just lastly, CIBC was upgraded to an outperformer from an underperformer over at Veritas. And they also upgraded BMO to an outperform. Price target there is $120. It closed at $110. So some nice upside there for BMO stock, according to that analyst. And it does have a 3.8% dividend yield. I'll leave it there. Have a great night, and we'll see you tomorrow.